Hey, everybody. Hey, good morning. Long time no see, ladies and gentlemen. So, we're starting the Wednesday show, the midweek review. And by the way, this is a quick video preview for the webinar, which is going to happen in a few moments. So do not tune out. Hopefully you'll enjoy the session. But yeah, ladies and gentlemen, stick around. We're going to talk markets. Let's see what's happening. Yep, I was away on Monday. So since then, yeah, we had a few pieces of data here and there, and we'll dig into all that. So hopefully you'll enjoy the session. Stick around, and I'll see you in a bit. All right, okay. Hello, and good morning, everybody. Hi, this is me, Darius Anucauskas from Markets.com, and yeah, today is what day is it today, honestly? The 26th. There we go. The 26th of March, 2025. So I want to welcome you, everybody, to this Wednesday's session where we're going to talk markets. We're going to pick up on the charts. We're going to look at what's happening in terms of data. We didn't have a show on Monday, so we're, kind of, it's the beginning of the week for me right now, but I'm very happy that the week is a very short one. But hey, look, before we jump into any charts, before we start looking at the markets, let's have a quick read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Just going to finish off a few things here and there. As always, my usual good morning in the chat room. Good morning, everyone. So yes, let me be the first one until somebody didn't type it before me. Good morning, everyone. There we go. Boom. So yeah, this is the game I'm going to play with everybody when they're going to be, joining in. So, ladies and gentlemen, I hope you can hear me and see me well. Everything's, I hope, running smoothly. Also, just before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And also, another thing that I really wanted to throw in, running a webinar today. Not the usual one, not the usual on YouTube, but this is going to be a closed session where we're going to talk a little bit of psychology. I'm going to talk about my past experiences and how kind of I got here in a way. So yeah, look, register. Hopefully you'll enjoy the session, and yeah, I mean, we can, you can always ask questions in there. The questions are more than welcomed, and yeah, like I said, I hope you will enjoy that one. Now then, let's have a look what's happening here. Not in oil. I'll get to oil in a bit, but let's have a look at indices. Nikkei 225. So look, in general, what's happening in terms of the economic calendar this week? Because again, this week is somewhat of an interesting one. I think the next week could be a little bit more interesting, but hey, that's fine. Look, today, what do we have like from the top economies? Today we got the UK CPI numbers came out. Yep, there we go. Let me just jump into those ones very quickly. Core inflation, blah blah blah. Lower inflation headline, lower inflation. Yep, lower. Everything is on the lower side. Retail sales a little bit on the lower side, apart from the month-on-month figure. Okay. I'll get to that point in a bit, but first let's have a look at what's happening here with Nikkei 225, and that index had pushed nicely to the upside. Look, I talked about this. I mentioned this before. Oh, John Taylor, I can see you there in the chat room. Thank you very much for tuning in. I really appreciate your comment. Look, you know what? I'll tell you this one, guys, because whenever somebody kind of drops just like good morning, hey, hello, it actually helps me out a little bit because again, it seems like I'm not just talking with myself in that little box in there with another bigger box where the charts are. So yes, thank you very much, John Taylor. I really appreciate that. I hope you're having a fantastic start of Wednesday, wherever you are, wherever you're located. But hey, morning, afternoon, evening, maybe, who knows. But yes, thank you very much for tuning in. I really appreciate that. Look, Nikkei 225. So what's happening right now? We'll purely from the technical perspective, so far so good, because what I said before, that if we climb back inside this little range that we broke out through here before, if we get back into that range, that's fine. That's something that could in a way attract a few more buyers into the game. But as you can see, why my arrow is from around here is because we do have a bunch of obstacles which are kind of a little bit in the way. So this downside line is something that I'm watching carefully. So yes, we broke that one, so great. In a way, everybody's thinking right now, hey, great, more positivity to come and stuff like that. But I would say you need to be a little bit on the careful side, because the Bank of Japan still comes out with these little, froze in of messages of their own, like, thoughts and what they're planning to do with interest rates. They do that occasionally, and that's what we're seeing right now. So look, recently we saw the Bank of Japan coming out saying, like, look, yes, we didn't do anything with the rate. We kept the rate the same at 0.5, but we're ready still to to jump in whenever we're needed. So in a way, what's needed here right now is that they're thinking of a possible interest rate hike again, and I think that what they're thinking of is the fact that the food prices apparently in Japan are a little bit over the norm, and as we know, inflation has been on the higher side lately, and yes, it did drop from the previous 4%, but it's still above BOJ's inflation target of around 2%. So yeah, so it's almost double basically, right? It's recently it came out at 3.7. Yep, the inflation number that we had on the 20th of March. That was the February number. It came out at 3.7. So, but what's interesting right now is that seeing that the next inflation number is coming out on the 17th of April, and apparently for now there is a little forecast. I mean, there's no official forecast, but there's another little forecast here from another provider, and that's actually quite on the higher side. So if the previous one was at 3.7, they're expecting a 4.3. So maybe that's what the Bank of Japan understands and knows, and most likely they know this, and that's where that their talks about what, let's continue hiking rate. That's where it's coming from. So in a way, that's something not very good for the stock market. Yes, it might be better for the currency, but which I'll jump in a bit. But for the stock market here, look, if the interest rate comes out on the higher side, I don't think that we could see major gains here on the index here. So in general, although I'm kind of leaning a little bit more towards the upside if we clear this territory somewhere. And by the way, this 38,000 kind of 260 zone with this one right here, it's not like specifically like that level, that I'm looking at. It's more of an area around that level. So actually I prefer push above all my EMAs, and then we could see a nice kind of push probably further north. But with the problem with the further north, as much as I would like to aim for the upper side of the range here, I have to admit that, look, maybe, just maybe, we could see a little bit of a hold up somewhere around here. Let me just let me just change this color here, because let me put it back to what I had before. Right, so this is what I'm talking about. So oh, no, this is the wrong one. Wrong. So this is what I'm talking about. So this downside line could be actually the kind of the barrier, for further upside. So in a way, my ambitions have to be lowered here a little bit, and I should aim only for this downside line, wherever it's going to be. If it's going to be slightly below the 40,000 zone, that's fine. Of course, the psychological 40,000 zone looks good here on the cash index. By the way, I'm looking at the cash index, and yep. But again, like I said, we need a nice push higher. In general, people are talking right now like that. that there could be a little bit of a recovery in the stock market, right? But what can I say? I mean, the recovery could happen. Just we need to see somebody kind of, being a little bit more silent about the tariffs and everything like that, or just basically not impose those, and then it's going to be a little bit better. But at the moment, we understand it is not the case. At the moment, we're seeing these wars, and we have this anticipation that from next week we have those tariffs kicking in on some goods and services. So yeah, on some countries. So look, for now, what can I say? For now, I am observing the price action, maybe up until those tariffs kick in. I think that's the 2nd of April, if I'm not mistaken. Until those kick in, maybe we could see a bit of recovery. So, don't exclude that option. But again, we'll continue observing the headlines. I mean, at the moment, if we start seeing something like coming through that, oh, you know what, it's going to be like, there's going to be more tariffs to come and stuff like that. So I don't really think that, especially if there's going to be something like something said specifically about Japan, then yeah, that's something that could affect the stock market here very quickly, and we could see a little bit of a decline. Now, another index which I really want to pick up here is China 50, and look. We had this beautiful rally first. I'm not going to spend too much time on this because I know that I need to go through a lot of stuff here. So we had a beautiful rally. We had a good push higher. That was on this whole hype that, the government came out saying we're going to support, we're going to we're going to lower down interest rates. And I was really hoping to see like a drop in interest rates last week for that, when that was that Thursday, if I'm not mistaken. That's the one. Yeah, there we go. So I was really kind of hoping to see a little bit of a decline here because they were talking about it. They were like, oh, you know what, we're going to support the stock market. But the PBoC did not do anything. And once again, I've kind of proved to myself that, look, China is a good market, and they do throw out these, positive news things about like, oh, how we're going to support the stock market, and and this is a good example here. We went back in September, at the end of September of last year, we rallied magnificently here, and it was all on the support of Chinese government, but it all then faded away. It seems like we throw this out, we talk about it, and then they're hoping that would be enough without actually doing any action. So for now, I've seen the only one entity that kind of was able to do something like that, and that was the Federal Reserve, when they keep on talking about something that but they don't do it, but they keep on talking about it, and kind of that's enough for the market to be fed with. But in general, like again, like I said, those other markets like Chinese market, I think that they need a little bit more than this. So yeah, that's why for now I'm not really bearish, but I'm not really bullish as well. I'm kind of cautiously bullish because from the technical perspective, we're still above this upside line here, taken from the low of the 5th of February. But yeah, I still believe that there could be a little bit of a decline here, a test of this downside, this upside line. But my preference for the downside is still on a drop below the 100-day EMA and below the 13,150 zone here, in order to get a little bit more comfortable with the downside. Let's jump into the U.S. market. So beautiful Dow Jones Industrial Average. First of all, the technical part. We're getting a nice hold up below this downside line. I talked about this last week and said that, look, keep your eyes on this downside line, taken from the high of the 20th of February. So far, so good. I mean, in a way, if this holds, we could see another decline. And look, I mean, in general, mission accomplished for me, because I was aiming, like I said, for this short-term move above the 200-day EMA, and it basically reached my target, which was the downside line. So now I need to kind of try to think of another another strategy, another kind of option where this could go. Just a second. Sorry, my throat is getting drier. So look, we got the we got the test. Now the question is, can we break this downside line? If we can break it, I'm not saying that I'm going to get very, very positive here, but no, but because I'm going to keep an eye on my 50 and the 100-day EMAs, which, as you can see here right now, coincide together. Yep. Now the question is what's going to happen next if we can get that clearance of those two EMAs, then great. I'll go further north. But let's not forget that still this move, it needs to be taken very carefully, because I talked about a theory before where whenever we break a trend line, we tend to revisit it from the other side. And this is where, like I said, we broke a while ago this long-term upside support line taken from the lowest point of October of 2023. So we never kind of revisited properly from the other side. So maybe that's what, what's in place here. Maybe this is what's going to happen. So for now, I'm going to aim only for that. And then I'm going to take it from there. In terms of economic data from Monday, so let's have a look what happened on Monday. S&P Global, so the estimates, the preliminary numbers of the S&P Global Manufacturing and Composite and Services PMI, well, they should have come out, but I don't see them here. Well, okay, let's leave it at this point in that case. Now, yesterday, house price index came out. Okay. So yes, okay, the red book. Okay, so house price index year on year came out at the same 4.8, but the month-on-month figure did drop a little bit. So the CB consumer confidence number, ooh, that's a bummer a little bit. Dropped below 100. Okay, so that's not really good. So the market is kind of digesting that one. Today, we do have some durable goods from the US, together with the AIA crude oil stock change numbers. Okay, that's expected to decline, so maybe that's what fueling oil prices to go a little bit on towards the upper side. And then going on to Thursday, we do get continuing and initial and continuous jobless claims, so something to keep in mind. The moment number is expected to go down. The continuous jobless claims, initial ones, are expected to increase a little bit. Okay, that's a little bit of a mismatch. Pending home sales, right, a little bit of an improvement here. And going into Friday, the PCE. Now that's where the whole action probably will be. So look, ladies and gentlemen, if you're thinking about the, when this week we could see some major, or not major, but good volatility, I think that this could be on Friday, especially not how to finish off, the month in general. That with the PCE, that would be spectacular. Because Monday, yes, Monday is kind of actually the last day, but I think that maybe the market participants will just, do all the trading, do all the action on Friday, and maybe Monday will be somewhat of a subdued day. Well, let's see if that's going to happen or not. But again, the PCE is expected to come out the same. The headline one is expected to come out the same at 2.5. The core one, where's the core one? The core, there we go, higher a little bit. 2.7 the forecast is, so a little bit on the higher side. Okay, look, what do we know so far about the Fed? So the Fed so far is expecting to see, or we are expected to see, okay, by the end of this year, we're expecting to see like at least 2 cuts, but this varies between the 2 and 3 cuts here, as you can see. I mean, last week we were higher here, to now we're higher there. So it's going to be unclear until the end of this year. But however, I think for me personally, what's going to be interesting will be this meeting in June, because are we going to cut here, or are we going to see a cut? Or actually, are we going to see just the same number? Because in May, again, nothing will happen, most likely. But in June, that's where the interesting bit comes in. So until June, basically, we could see the market maybe not on the highest side, but if in June the Fed comes out with the cut here, then yes, I mean, this is where we could see maybe a little bit of a rally here. I think that the Fed is taking this approach, and they just want to see what's going to happen with inflation, because again, due to all these tariffs, I think that some central banks may be like taking a bit of a a side stand here. Like, I mean, in general, like maybe they're taking a pause to see what's going to happen, if we're going to see major inflation coming through or not, or something like that. So I think that that's quite reasonable in my opinion. So let's see how this works. But again, it may come at a sacrifice of the stock market. The S&P 500 looking good here, and what can I say? We had a good run, we had a good push. We're traveling back to this into this lower side of the rising channel where we were previously, and I think that, and the lower side actually coincides nicely with the, or almost coincides nicely with the 50 and the 100-day EMAs. So I think that for now I need to lower down my appetite here and just stick to this area, and so far this is working out nicely, because I said to you that if we do pop above the 200-day EMA, my next targets are these EMAs, the 50 and the 100, together with the lower side of this rising channel where we were previously. If we do climb back inside of it, yep, okay, great, wonderful, more buyers could join in. We could see, you know, something like this happening, traveling back to the midpoint of this rising channel. But again, for now, let's not rush into things. Nasdaq 100, let's have a look. Okay, similar story. Everybody's recovering. That's fine. You know, I think that this week could be a little bit on the positive side, in my opinion, just due to the fact that next week we're expecting some kind of chaos in terms of tariffs and stuff like that. So maybe this week we're taking a little bit of a pause, taking a little bit of a breathing space. So what can I say? This Fibonacci, I think it has to be drawn now this way, the other way around. So this is what I'm talking about. So we can see that we tested already 38.2. That's fine. Can we go towards that 50%? Well, let's wait and see. If we can climb above that 38.2, which is on my chart here, roughly around the 20,300 zone, and that's on the cash index here, then yes, I'm aiming for the 50% on the on the Fibonacci retracement, which is drawn from the highest point, from the current all-time high, to the lowest point of March. And most likely that's going to stay as the lowest point. I don't know, unless something really drastic happens, we start selling off, but I think that this is going to be the lowest point of March. Now let's have a look what's happening here with the German DAX. And okay, look, for now, I am looking at this here, and what can I say? A drop below the 22,850 zone here is something that I like here. I still consider that area, but look, it played out as a nice area of support. This upside line no longer needed. I think that's it has done its job. So now we can chill a little bit, and I think that actually we can chill a little bit, because if you're looking for some higher levels on this one, well, I need to see a push above the 23,477 territory. For the downside, I need to see a drop below the 22,850 zone. If we can get a clearance through one of these areas, then I'll consider the next short-term directional move. And for now, I'm just going to observe the price action and not really do anything. Now, what can I say? What can I say? Look, in terms of economic calendar, in terms of Europe, today, do we have anything? No, not really, to be honest. Tomorrow, yes, a few speeches here and there. Nothing major, to be honest. Yep, the Windows is speaking. And then on Friday, the Windows speech again. Consumer inflation expectations, right? Okay, so something maybe that could be quite interesting. But in general, I think, yeah, the PCE will take center stage. So let's jump into the FTSE 100, and of course we can pick up on the inflation number which came out from the UK, right? So inflation number, once again, 2.8, the headline one, lower than the previous, lower than the forecast. The month-on-month was a little bit on the higher side, but okay, that's the year-on-year, the core one did drop as well. So in a way, that's kind of pushing towards the idea for the BOE to go and cut rates, because as we know, United Kingdom, or the Bank of England, still remains at 4.5% interest rate. I mean, similarly the same as the US, but In terms of the euro area, for example, they have a 2.65. So that's where maybe, like maybe this is where the mismatch is or something, like, maybe but again, maybe you would be thinking that, hey, maybe it could be, closer to the United Kingdom, or sorry, to United BOE could be closer to the ECB, but it seems like no, it's more aligned with the Fed. But still, in my opinion, again, inflation in UK has been slowly dropping, and yes, I mean it started shifting back down. So I think that the Bank of England will take a pause and will probably again say that we're ready to act, but we want to see if inflation has been sustained. So the next interest rate decision is expected to be in May, on the 8th of May. So yeah, that one is actually forecasted to be a little bit on the lower side. Maybe then we could get that cut. So before that May interest rate decision, we will get another inflation number. So let's see if that one goes lower again. If it does go lower again, if that where's that in calendar there, if this one basically continues to slide again, because it kind of reversed back down right now. So if it does slide, then I think that yes, the BOE could be a little bit more on the comfortable side to go and cut rates. So at least by 25 basis points. So now what we're seeing here is that yes, inflation was on the lower side. We did get a nice little pop here. I think that it's somewhat looking quite positive, somewhat positive on this one, on the FTSE 100, and again, this fact that maybe we could see some cuts later on. Also, a little recovery moment in the US indices as well, helping out here the FTSE to push back up. So again, let's see if we can climb higher. But again, for me to get comfortable with the upside, I would prefer actually to wait for a push above the 8,700 and kind of 60 zone there, and then we could go from there. The dollar index, very quickly, ladies and gentlemen. Dollar index, yes, this is me slowly shifting into currencies. It popped higher. It moved above my 103.75 zone. So from the technical perspective, everything seems kind of to be pointing more towards the upside, towards a larger correction to the upside, because again, I said to you before that keep your eyes on this downside line and also this little range, because it seems like we created a double bottom here. And again, given that we're seeing the PCs coming out, so let's see how they're going to come out on Friday. But in general, let's not forget that the week could be full of surprises. So for now, I am just being very careful. Again, I'm gonna probably consider on this one a move higher here in the short run, as long as it stays above the 103.75 zone. If it starts drifting below it, then I will consider a bit of a move back down. Let's jump into the Forex world, ladies and gentlemen. AUDUSD. So now look, AUD is pushing back up because we got some numbers from Australia as well this morning. So where's that monthly CPI indicator? There we go. Lower number. Okay, now look, I think that for now, AUD is kind of stuck here, and I said to you before that if this upside line remains intact, which is taken from the lowest point of February of this year, then there is a chance for this one to rebound and push higher. And look, what can I say? For now, I am just gonna stay somewhat positive. I will continue targeting the upside if we remain above the 50-day EMA. If we somehow drop back below it, I'm taking a neutral stand, because for me the downside still could come on a break below this upside line. And if we do drop also below the lowest point, the current lowest point of this week, which is around the 0.6255 territory. AUDJPY, my risk on risk off monitor, there we go. We're seeing some recovery. Again, we're testing this downside line. Can it provide resistance one more time? If it can, I'll go lower. But if this time, this breakout here again becomes a little bit more successful, and we stay above this downside line, and we stay above the this 50-day EMA, then my next target is the 100 and the 200-day EMA, and then I'll go from there. NZD USD. NZD USD. So similar story, but I would prefer to see a push back above the 100-day EMA and back above the 0.5771 territory. If I can get that move, amazing, I'll go higher. But if we struggle, with the 100-day EMA, another decline here could be possible. And let's not forget the DXY, the dollar index, seems to be pointing a little bit more towards the upside for a basically larger correction to the upside. And that's where I'm going to, what leads me into USDJPY. So we remain above this downside line, which we broke above, and we found resistance near the 50-day EMA. That's fine, but again, if that gets cleared, if the 50-day EMA gets cleared, amazing, I'll go for some higher levels. But for now, I mean, of course, everything can happen. The fact that the BOJ came out, or we saw some in the headlines, we saw some messages that the BOJ is ready to act and ready to go in with a rate hike. That's of course playing out positively for the JPY, but let's see which one will outpull which for now. But again, at the moment, we're seeing some strength in the US dollar. Let's see if we can pop a little bit more to the upside here. If we can clear that 50-day EMA and clear the current highest point of this week, then yes, I'll go a little bit higher. USDCAD. So of course, Canadian dollar getting a little bit stronger, on the stronger side. We know that. We understand why, because again, the WTI oil is pushing nicely to the upside, and yep, this is helping out the Canadian dollar quite a lot. And what can I say? For now, I will lean a little bit more towards the downside, but again, let's see, how this is going to play out around the 100-day EMA, which, as you can see, did its job before. It did provide good support here before, so let's see if this is going to be the case again, because if it clears that 100-day EMA, my next target is the 1.4150 zone, and then we'll go from there. USD CHF. So again, it's almost kind of the same as DXY, so it's almost doing the same thing as DXY. Yeah, I need a clearance of this downside line and this 0.8870 zone in order to go higher, because again, at this point, I'm just observing the price action, because don't get me wrong, there is still a good chance for this one to drift lower. Let's have a look what's happening here with EURUSD. We're near a key area of support near the 1.0760, but to be honest, if that gets cleared, I'm going to lean towards that 200-day EMA. For the upside, pretty straightforward. I'm going to take a very conservative approach here, and I'm going to wait for a pop above the 1.0950 zone in order to aim higher. EUROJPY. Okay, this one's stuck, and I think that what I would like to do here is get rid of all these downside lines. I think that that's it. We had our fun. Maybe this one I'll keep for now, but this level here as well, I think that yes, from the very short-term perspective, if you're looking for some higher levels, then keep your eyes on the current highest point of this week near the 163 zone. If that gets cleared, if we pop above it, I'll go a little bit to the upside. Euro Aussie very quickly. Okay, this one's interesting because I talked about it recently in one of my analysis here on Euro Aussie right there. So yes, so far so good. Look, I mean, this is something when we were here still, I said to you that look, we could get a hold up near that 1.71 territory. We got that kind of hold up. Okay, we did push a little bit higher, but then we drift back below it. So now it's a totally different game plan here. Now it seems like we could be forming something of a maybe bullish flag or a bullish pennant. So let me show you what I'm talking about here. So if this is going to be the case, if this is going to work out nicely, then yes, this is exactly what I'm going to be aiming for. So basically this possible formation could break out higher according to all the TA rules, but again, don't get me wrong, I mean, I've seen this happening in the opposite direction, so let's be careful. So if we do drop below this territory, below this lower side of this triangle pattern, then I'm going to aim for the 50-day EMA. Quick update on Euro NZD, similar story here, but this one is still holding on. Look, I mean, I would say this way, as long as we stay somewhere above this 1.8696 territory, there is still a chance for a move of something like this. If we start falling below the 1.8696 territory, then I'll aim for the 50-day EMA, and then we'll go from there. GBP USD, of course. So UK CPIs are not really working out here well for the British pound, and those were on the lower side, so we needed to see something something higher, but it came out on the lower side, so everything's in line, everything is according to the plan. Okay, we came very close to testing my 70.50, but you know what, I think the fact that we got a hold up near the 1.30 zone, the psychological 1.30 zone, yep, it is now, it's the barrier that we'll be watching. So what I really want to do here is I want to remove everything and start fresh. So first of all, I'm going to mark the barrier, which is, a strong area of resistance right now, the 1.3014. If we can jump above it, I'll go a little bit more to the upside. But if for now, what we're looking at here for the downside, yes, there is a chance of a drop below the 1.2887 territory, but let's not forget that this is also a good target. This 1.2875. I think this could be a little bit of a better target. So if we do drop and stay below that 1.2875, I'm going to consider a larger correction to the downside towards my EMAs. That's it. Gold. Now gold is, look, if we measure it from the low of the 28th of February to the current highest point of March, we have this Fibonacci. We did the 23.6, and now the question is, can we get a further decline, or is this actually the area from which we will just go higher? Well, to be honest, at this point, for me to get comfortable with the upside, a pop above the current all-time high is required. Period. That's what I need to see a push off here. I mean, if we can clear this 3057 territory, I'll go to the upside. For the downside, there is still a chance, and if we can drop below that 23.6, which is roughly around the 3004 zone, if we can drop below that area, I'm going to consider a bit of a larger correction back down towards the 2971, 72 zone here, and then we'll go from there. Silver, beautiful rebound, amazing, that's fine. However, is this going to be enough? I mean, look, in general, I talked about this idea where I said that if we do, whenever we break a trend line, we tend to revisit it from the other side. We did revisit that. We rebounded, pushed, and now we're pushing higher. We pushed back above the 33.38 zone. And the question is, can we go higher? Well, I think that at this point, let's be a little bit more on the careful side and cautious side. So, you know what? Let's keep an eye on this barrier, the 34.22 zone. If we can get a nice clearance of that, my next target is the 34.85, and then we'll go from there. In terms of the downside, I think that's pretty straightforward. At this point, I'll get rid of this downside line. At this point, a drop below somewhere below this 32.75 territory would be nice, and we could then go from there. Let's jump into oil. Let's have a look what's happening here. We cleared my barrier here, the 68.34 zone. We cleared it. We're now testing the 50-day EMA, or we already tested that. So the next question is, can we clear that 50-day EMA? And if we can get a nice clearance, then I will aim for the 100 and the 200-day EMAs, marked as the blue and the white lines, respectively. If we somehow drop back below the 68.34 zone right there, I'm going to consider a bit of a move lower. That's it. Natural gas. Let's have a look at this one. Natural gas is at an interesting spot here. We remained below the 3.95 zone. I talked about this, but hey, also I'm talking about the 50-day EMA, which has been a good area of support recently. So look pretty straightforward from the technical side. We are, if we can get that nice drop below the 50-day EMA, I'm going to go lower. However, we do know that there isn't a possible increase in the stockpiles again of natural gas, so we're waiting for those reports. So hey, let's see what's going to happen there. If that's the case, then we could see, a rebound, a stronger rebound back up. But if it somehow misses the forecast, then we could see a nice drift towards the 100-day EMA. Let's jump into coffee. Let's see what's happening here. Okay, getting closer to my 400 zone right now. So yes, where we already were there. Look, my upside scenario is from the 411 zone. That's my game plan here. And if I can get a nice clearance of that 411, I'll go to the upside. Let's jump into sugar very quickly. Sugar is right. Okay, so the psychological psychological 20 mark, it did have its role, and it had a strong, how to say it, it did have a strong, it played a strong role. There we go. That's the word that I was looking for. Sorry, my eyes itching a little bit. So it did have a strong role, and it played a strong role. And of course, we understand that if you're looking for some higher levels, a clearance of that area is required. At the same time, a push above the 200-day EMA would be nice. And then we could go from there towards the upside. Cotton, very quickly on cotton, there we go. We're near my area of support. Let's see if we can rebound from this one, from that 64.85 zone, or in general the 65 territory. If we can if we can remain above the 65 mark, then great. I think I will consider a move back up. If not, if we fail to stay below that 64.86, I am considering a move lower. Okay, let's have a look at the crypto world, ladies and gentlemen, for dessert right now. So hey, Bitcoin has been pushing nicely to the upside, so that's fine, that's good. I mean, we're approaching this downside line, which I talked about previously. This one's taken from the highest point of this year, or the current highest point of this year, so that's fine. The question is right now, what's going to happen next? Are we going to get a hold up, or actually are we going to, break higher? Well, either way, to be honest, doesn't matter for me. The push above the psychological 90,000 zone is the one that I'm watching. If we can get that move, amazing, I'll go higher. But in general, this little formation looks like more of a oh, excuse me. This little formation looks more like a rising wedge pattern, which according to all the TA rules tends to break to the downside. So if we can get that nice breakout here through the lower side of it, great. I'm going to lean a little bit more towards the downside. Bitcoin Cash, I like this one. I really, really do. And it's very technical. So now it's, look, I had some lines here previously, but those got violated. So back to the drawing board. So I'm going to take a simplistic approach here. A drop below this 320 zone, which is the current lowest point of this week. If we can drop below that, I'll consider a move lower, because a forthcoming lower low will be confirmed. For the upside, what I would like to see here is probably a push somewhere above this area, 355 zone. It had a good area. It was a good area of resistance recently, apart from these few breakouts here. But in general, it did play its game. It played its role. And if we can get a nice clearance above that, we can also climb above the 50-day EMA. Ethereum, very quickly. So this one is holding below the 2,120 zone. All right. Okay. So, you know what, in that case, I would say that if you're looking for some lower levels, I think that there is a chance for this one actually to move lower. The only problem is that all other cryptos seem to be showing some willingness to go higher, but maybe Ethereum is the one that, that the one is showing the real picture. In general, it's also forming something of a rising wedge pattern. Yep. So yes, something like this basically. So if that's the case, then some downside could be possible, but again, a breakout is needed. Ripple is a little bit more on the positive side. It remains above all my EMAs on the daily chart here, so that's fine. And yep, still my next target is this downside line taken from the high of the 16th of January. Litecoin is also pushing back up, but again, similar story, seems to be forming something of a rising veg, which yes, it's a little bit worrying me, but hey, let's see if that's going to be the case or not. Okay. Yeah, okay. So hopefully we could see, a breakout here. Hopefully we can see a breakout to the downside, because again, I like when technical setups work out. But again, this could play out in the opposite direction. If it clears the upper side of this rising veg, then ignore this rising veg idea in general. Dogecoin looks quite positive, pushing back up, and I think it has a good chance to travel back to the 200-day EMA or the midpoint of this falling channel. Let's see. And Polkadot is something that I really like as well. It's currently near the key area of resistance around the 4.63 zone. Look, we need to see a further move north here. We need to see a further push towards the, well, actually above the, we need to see a push above the, back above the, let me just double check. Okay, we're above the 4.63 territory. Okay, as long as we stay above it, I'm going to lean towards that 50-day EMA. For me to consider a downside move, I would like to see a drop below the 4.56 territory. If we can get that nice drop, then yes, I mean, I will consider a move lower. So yep, that's, I think, going to be my game plan here. A very short-term game plan. Maybe we could find support somewhere else here, but you know what, I'm going to keep it tight on this one right now, and I will, like I said, I'll keep an eye on this 4.56. If we somehow fall back below it, maybe there could be a chance of the drift lower. Right, ladies and gentlemen, that is a wrap. And look, before you go, as always, I just wanted to show you this one, that look, you can join my webinar today. Just register here, yep, you can find the link in the description of this video. But look, looking forward to seeing you in my webinar later on today. So hopefully you will enjoy that one. But in general, thank you very much for tuning into this one. I really, really appreciate that. So I hope you found something useful here. Let me know in the comments what you think. Do you agree with some things or not? And always don't forget to like and subscribe. So thank you very much. I shall see you on Friday for my weekly wrap up here on YouTube. But again, if you join my session today as well, I will see you later. So yeah, thank you very much, and I'll see you later. Bye-bye.